Welcome to NM's Arena. In this video, let us discuss regarding the weaknesses of the stock exchanges in India. The stock exchanges in India suffer from a number of weaknesses. Some of the important weaknesses include lack of professionalism. Majority of the stockbrokers, they lack professionalism. They lack proper education, business skills, infrastructural facilities, etc. that inhibits them to provide proper service to their clients. They are not able to guide and counsel their clients in the manner expected from them. Another weakness is that the Indian stock markets are dominated by a few institutions. The UTI, LIC and GIC are the major players in the Indian stock markets. The buying and selling by these institutions sets the tone in the market. The market goes bullish if these financial institutions start buying the shares. On the other hand, the market becomes bearish on their selling of the shares. There are many other limitations also for the Indian stock exchanges. The Indian stock exchanges suffer from poor liquidity. A small number of scrips are regularly traded on the stock exchanges. Out of over 3,000 scrips, less than 500 scrips are generally traded. And even out of this, 90% volume of the trade confines to between 200 to 250 scrips. This means that other scrips have very low liquidity. A recent survey into the frequency of trading showed that shares of just about 200 companies were traded every day. And the shares of above 500 companies were traded only once a week. And shares of 396 companies were traded once in a fortnight. Similarly, shares of above 900 companies were traded only once in a month. And again, shares of above 900 companies were traded once in a year. These statistics show the poor liquidity of most of the shares. A seller has to wait for disposing of his holdings for a long time. When an investor is not sure of selling his shares whenever he needs money, then he will be discouraged to invest in the shares. So this is an important weakness of the stock exchanges in India. And in addition to that, some big operators influence the sentiment of the stock exchanges in India. In the Bombay Stock Exchange, 3 to 4 operators used to call the shots. The case of Harshad Mehta is well known in India. He created bullish conditions in the Indian stock exchanges in the first quarter of 1992, and the BSE Sensex nearly doubled in a very short period. This artificial increase in prices of shares adversely affected the investing public, and they suffered huge loss. It is the weakness of stock exchange working that some operators can create sentiment as per their liking. And there is speculative trading. The trading in stock exchanges is mainly speculative in nature. The operators try to derive benefit out of the short-term price fluctuations. The brokers try to create a sentiment in the market which will be beneficial to them. And the genuine investors try to keep away from such markets. So, these are the major weaknesses of the stock exchanges in India. Thank you for watching this video. For more videos, subscribe the channel.